Hey everyone, my name is Preet and this is Spent, and every episode Derek Fung joins me to talk about some of the largest purchase panels in North America and how people are really spending their money. Derek, welcome back to the show.
Hey, good to be back, Preet.
So what are we talking about this week?
This week we are talking about Robinhood.
Robinhood, the old fairy tales, or are we talking about the
Notorious
investment?
Robinhood, the most popular trading app for millennials and Gen Z.
Right,
Self
it's kind of interesting because the old Robin Hood fables were all about taking from the rich to give to the poor. And some people would suggest that the nature of Robin Hood's model with commission-free trading but selling order flow to institutional traders could actually be the opposite. Kind of ironic. But let's take a look at some of the data that you guys were analyzing. And what we're looking at here is the net investment trend. So what I want you to do to set this off is just explain in your analysis, what does net investments mean?
Net investments are deposits minus withdrawals. So it's a glimpse into I'd call it, the velocity of investing activity that is happening amongst the group of users that we analyze.
Right. So if you have a net investment level below zero, it means you're in net withdrawal. So people are taking out more money than they're putting in. But this sort of backs out the market performance. This just looks at people's own behavior in aggregate, whether they are in average putting more money in or taking more money out of the investment markets, correct?
Yes.
So looking at this chart, we're going back to the beginning of 2019 up until the end of July. And my first question is, looking at this chart, does it look like you can pinpoint whether or not there was a pandemic or there's anything that really changed?
I mean, definitely whenever you see more people depositing is when individuals are trying to take advantage of market corrections. So definitely can tell from this, when the markets are down, when they're up, and looking forward, definitely a lot more individuals are what they call taking profit and selling out of the stock market and maybe withdrawing it back to their bank accounts. But you can definitely see the ups and the downs and get a good glimpse as to what the stock market is doing at any given point in time.
And the thing that kind of stands out to me is, when you look at the market correction that we had in, I think it was basically the third week of March, is I think when it was the absolute low. It looked like people were actually still putting money in. And I know that there was, I think, a lot more people trying to time or buy the dip than before. And I think, with the sample in this data, if I'm not mistaken, it tends to skew younger. And
Yes.
there has been some stories about younger investors who are being very aggressive, including trying to time markets very aggressively, buying the dip. And I think that's what we're going to take a look at as we explore some of these other slides here. So there are a number of major trading platforms in the US. I know the data took a look at Vanguard, Stash, Fidelity, TD Ameritrade, and Robinhood. And what I only pulled out two of the charts to take a look at, and that was Robinhood, and then one that was kind of emblematic of the other four. And so I just picked Vanguard. And so I'll point out the y-axes here are really different. So walk us through the difference between the non-Robinhoods and the Robinhoods, essentially, in this data.
Yeah, I mean, at the highest level, Robinhood's been around for many years. It's been notorious for its zero commission brokerage. I'd say that why I think, and I'm curious your view, young folks are jumping on the Robinhood bandwagon. I'd say first, they're getting a ton of media attention. So if you're following any major news outlet, there's this new term called the Robinhood trader, and these are typically, classified as younger skewed retail traders on their phones, many of them new to the stock market. And so, whenever you see a major market downturn, I feel like, my generation, at least, we've seen the last downturn, and, you do a lot of thinking around, hey, if another downturn occurs, just buy the dip, buy the dip, buy the dip. And I think this is what a lot of folks have been trying to do, through the last slide and very clearly this slide. And they're using Robinhood because not only are you able to, buy stocks without having to pay commissions, but they actually have a very clean, intuitive user interface. That's one. I think two, they have actually a really good interface for options trading. And I know, we don't have time today to go into what an option is and what options trading entails, but definitely, I think I saw a of an image of the amount of Googling happened for what is an option, and that's only spiked. And a lot of young people are essentially, taking a lot of their money and trying to buy the dip. Also, you can argue sports betting has gone to near zero, so all that money potentially is going to stock trading. So I'd say it's all of that combined that's driving a lot of the Robinhood activity. Also, if you go on YouTube and just Google, stock trading advice, it's all, it's all about Robinhood. It's all people are showing their Robinhood balances, people are doing it in
Yeah.
Robinhood, and it's just this new generation of investors, whether they're good or bad for the stock market. And clearly in this graph, you see this massive spike, and it's all of this above that I've talked about that I think is driving this activity.
Yeah, one of the things that you talked about just there in your answer, the sports betting going to zero as all sports stopped during the height of the lockdowns, that has basically been funneled into some of the stock markets. I think that seems to be spot on. I mean, there is that sports betting company, Barstool
Are still,
Sports,
yeah,
and the founder of that company for a while was going on and live streaming about his stock trading.
yep,
And I think, all those people with money, they wanted to bet. Instead of betting on sports, they're
yeah,
betting on stocks. So I actually
yeah,
see it as more, you know, incredibly aggressive speculation as
yeah,
opposed to traditional investing. But I
yep,
think that is a large part of what's going on here. And also, like you said, the interface for Robinhood is just so much better than some of the traditional platforms, which haven't really changed much in 20 years. And I know a lot of people get intimidated when they place their first trade, whereas Robinhood makes it almost too easy. And then with the low commissions, it's easy to see why there's so much transaction volume there as well.
yeah.
um,
And
and
one thing just to add to is, options buying, like that's speculation. That's not investing. It's
mm,
trading, it's speculation. Investing is buying something and holding it for the long term. So I think that's where you're seeing all the movement around the, withdrawal deposits, and also it was revealed that SoftBank had been, you know, buying up call options in the stock market and propping it up. So I don't. There's something funky going on, and there's a lot of articles out there saying it's the Robinhood trader that's doing it. Whether that's true or not has yet to be determined, but it's definitely been a very interesting time for investing, trading, and the stock market.
Absolutely. I just wanted to point out I'm having my coffee in my bonds are for losers mug. It's a joke. I don't actually think bonds are for losers. I know we're talking about investing and speculation, and the irony of having this mug is not lost on me. So, bonds are not for losers. It's a joke. Um, Now, let's take a look at the market share change since January to the end of July. I mean, there's one performer here that just absolutely stands out. But I think this is a culmination of what we've all talked about. But
Yeah.
explain what's going on in this chart.
It's everything we talked about, but you can also argue it sort of strengthens the view of, the importance of simplicity and user experience and design of an app, because you could argue uh, a lot of these brokerages have since, dropped all their commissions to zero. A lot of the brokerages now have fractional shares. For example, on Stash, you could buy, $10 worth of Tesla. They've now done the 5-for-1 stock split, but you could argue a lot of the, you know, uh, startup brokerages like Stash and Robinhood were convincing and onboarding consumers because they had zero commission and fractional shares. Charles Schwab has now done it. Ameritrade, E-Trade, like everyone has now essentially dropped their fees to zero, but we're continuing to see this massive uptick in market share Robinhood and Stash, and that just goes to speak of the importance of user experience and the brand that some of these cooler brokerages have built.
Yeah. One note before I comment on that is this data here shows that Robinhood's market share went from 1% of users in the sample to 43% of users in the sample. So I don't think Robinhood is now 43% of the trading platform market overall in the US, but in the sample, which is indicative of things that are happening, you can see that in this sample, which tends to be a younger investor, really there is a huge amount of change. And like you said, it's just a different experience. There's people who've been locked down at home. In some cases, maybe they're looking for something to do. And if they were betting, now they're betting in stock markets. And, Googling what is an option to me is kind of like, it's kind of a sign of dangerous things ahead. Because
Yes.
if you're Googling about that and it's coordinated with an increase in options trading, I know how difficult it is to wrap someone's brain around the idea of proper options trading and execution of strategies. And I think a lot of people just use it for grand speculation, which is, I think, what's driving this behavior. What I would really like to see is data on things like, what do the total portfolios look like for people across these different brokerages to see, okay, they're putting more money in,
Yeah.
but are they hyper concentrated in just tech stocks? Are they only following things people are
Tesla,
talking about in the
Tesla.
headline? It's
It's
all
all about
Tesla,
Tesla.
Amazon, right? All the FANG stocks and what have you. Same thing with deposit volume. So this slide, we're looking at the market share of deposit volume. And again, Robinhood in this sample went from 1% to 51% in basically 7 months. Like, this is unbelievable.
It is. It's I don't know
Not
if
much
I
else
have
to say on that.
words.
It's
I have not
completely
much else to
unbelievable.
say. It really is.
Uh, all right,
Um,
we can move to the
what?
next slide then, looking at the age mix. So again, you talked about how Stash and Robinhood are, some of the newer brokerages, and they've tried to cater towards people who haven't invested before and lowering the barrier to entry through fractional shares and zero commissions. And this shows us that the age mix does skew a bit younger. And even though the sample is young, if you look right at the bottom, the pink and the green, that represents people under 35. And for Robinhood, 81% of their users are under 35, which is an incredibly young investor base. So it sounds like they are succeeding in penetrating into that market, especially when this is an age demographic who are saddled with high student loans, high housing prices, so the ability to save and get into a house. They're just stretched very thin, and yet at the same time, you see that it is still possible for them to invest. And I think these startups have sort of successfully penetrated that market.
Yeah, I think it's a great thing for democratizing investing. I think at the same time it's a little bit of a cautionary tale, just given, if you read up on what's happening in the stock market, companies should be valued based on fundamentals. Well, if nothing's really changed, but the stock price is going up, it's a bit of a cautionary tale. And I think there's been a bit of this like, oh, the stock market can only go up and up and up. And you could argue since March that that is true, but September things have cooled down a little bit. But it's definitely great for just democratizing investing for everyone. But also at the same time, I think, it's we have to be careful as investors, given what some of this data is pointing to as well.
Yeah, there's learning about investings in market history and looking in a rearview mirror and saying, oh, if I had bought that big dip in 2008, 2009 and just held, look how much money it would have made. It's so easy. And then you see a market correction happen. You're like, oh, here's my opportunity. It's totally different once you actually have money in the game and then you experience a correction.
Yeah.
So, whenever I see people talking about, educating people with those stock trading simulators, like here's $100,000 of fictitious money, go ahead and trade. People build up
Yeah.
a lot of confidence, but it's totally different when you actually have your own money in the game.
Yeah.
So, with every cycle and every generation, people learn those lessons in different ways. And the other thing that we know is true is that when markets have done really well for a long time, that's when a lot of people get the confidence to go into the market because they see all the people around them who have been making all this money.
Yeah.
Usually it doesn't end up too well for everyone at the
It's
end.
it's a different world this time too. In 08, 09, YouTube, TikTok, that whole generation of consumers who can literally go on and just read up on anything, and anyone can become a stock influencer, a great
Right.
stock picker overnight. And that literally wasn't really the case in 07, 08. And so it's a very different world. And this is why I think it's great that, we've democratized trading and investing. At the same time, I think it's also uh, a sign of caution ahead.
Yeah, it's definitely a double-edged sword, as you say. This last graphic that we're going to look at is the income mix by the different brokerage platform. And if you take a look at the 100,000 plus, which is sort of the, I don't know what that color is, mauve,
Hmm.
purplish, pink, light purple, I don't know what that is.
Isn't that your favorite color, Preet?
Puce. Puce is my favorite color.
Okay.
You can see that TD Ameritrade and Fidelity and Vanguard, so kind of like the more legacy platforms, they
Yeah.
definitely have a higher share of people with the highest levels of income. And conversely, if you look at the other end, Robinhood and Stash, the first two colors there, if we just take a look at Stash, 6% and 19%, those are people with incomes $25,000 and under. In Stash's case, representing 25% of investors on that platform. So it definitely
Yeah.
skews towards lower incomes for those platforms, which I don't think is a surprise based on the things that we've talked
Yeah.
about.
No, I attributed one big feature that Stash has is fractional shares.
Right.
They were one of the first, if not the first, to go to market on mobile with the ability to buy, a fraction of $1,000 stock, for example. So I think it all makes sense. I think it makes sense. I think, again, since then, a ton of the big brokerages have done it. I think Schwab calls them stock slices, but not surprised at all in what we're seeing in that data.
And now that we're almost in October. It's the end of September. And we saw from our last episode the change in behavior as those top ups to the unemployment benefits ran out. There was a change in how people spend their money. And I wonder if some of that money was going into some of these more speculative plays. But
Yeah.
what do you think the take home story is about, Robinhood or the stashes of the world in terms of investors? What do you think is the big takeaway from this data that we've looked at?
Yeah, I mean, I think having, spent time on Wall Street, I think that it's an industry that's traditionally been driven by the big players, the institutional players, the funds, and I'd say it's been interesting to watch the true democratization of investing, and retail trading driving a lot of it, the Federal Reserve with their stimulus and stimulus checks driving a lot of it. I've heard kind of views from both camps. One camp being, oh, the valuing of a stock will be changed forever. I don't know if that's really going to be the case. I think, I do think the music, it's been interesting to watch what's happening. There's a bit of this self-perpetuating, hey, if more money is coming and people are telling others to put more money in, more money is going to come, and that's going to keep the market going. I think, if you look at the stock market in September, the music is slowly starting to stop. The bubble, if you will, Tesla and all these shares have just been going up way too high. So I think, however, there's definitely going to be a long-term permanent shift in retail investing, and I think that more and more young people are coming into the game. I just caution everyone to do it very carefully, because if you look at the dot-com, I feel like it's similar. It's not the same, but it's similar, and that's why I think we have to be very careful. So that's my view. What's your view, Preet?
Well, I'm not good at predictions, but I will say that what I think will happen at some point in time is, the market will have a correction, and then Google searches for what is a put option will spike right
Yeah,
after
yeah,
that.
I yeah. It'll be an interesting year, that's for sure.
All right. We'll leave it there, Derek. But thank you for sharing your insights into this data. And we'll see you in the next episode.
Thanks for having me. Talk soon.
Always a pleasure.